Welcome back to my channel. In this video, I'm going to be covering Pfizer. This is a big pharmaceutical company that did really well during the pandemic with the vaccines that they sold. The company hasn't been doing so great and the stock price is down considerably. I wanted to evaluate the company. I'm going to value the company and share that analysis with you. Now I'm going to make a decision whether I should buy or sell Pfizer. Before I jump into my analysis, do me a favor and like my video and subscribe to my channel. And please leave a comment. I'd love to hear what you think of Pfizer. I have a process to go through an investment, and I'm going to take Pfizer through that process. The first area is really important. I have to buy into the company. Do I believe in Pfizer? Do I think the company's doing well? The management team's performing well? Good decisions being made? Do I think the industry is worth investing in? Overall, am I a buyer into this business? Do I want to be a part owner? Second, I want to look at the balance sheet. Is the balance sheet in good health? Is debt less than 3 times EBITDA? And last, discount. I want a discount on the stock price. I'm a value investor and I make money by buying low and selling high. Based on the answers that I get to those questions, I'll buy, hold, or sell. Pfizer has been around for a long time. Their pharmaceuticals have been really effective in helping a lot of people for decades. They have franchises that generate a lot of free cash, and that's what's nice about pharmaceutical companies. Now, the recent couple of years haven't been great. In fact, there's been some mistakes that I would say management's got to pay a little closer attention to the business. One example, the COVID vaccines. It's great that their scientists found a vaccine. So big credit to Pfizer for doing so. But in the 2023 year, they had to write off a lot of inventory of vaccines. These vaccines went unsold, and it was a multi-billion-dollar write-off. So that's an example of not being able to forecast their business properly. And it's a bad mark on the management team. I think they could have done better on that. They're trying to grow by acquiring a company. And I think that's wise. The more franchises they have is a good thing. Now, let me tell you more about that acquisition. Pfizer is looking to acquire Xeljanz. Xeljanz focuses on helping people with cancer. And 1 in 3 people are going to be having to deal with cancer in their lifetime, which is a lot of people. One of the things that I found to be really interesting about Xeljanz is their treatment helps people avoid the radiation treatment, which is a real positive because that is a very hard process on people. If they have cancer, they go through radiation treatment and hopefully they beat cancer, but it's very hard on them. And Xeljanz trying to circumvent that process by avoiding radiation treatment, but controlling the cancer or getting rid of the cancer, which is a far better experience for the patient, yet it achieves the outcome they're looking for, which is to put cancer in remission. So that's a really, really good overall business plan and a overall good plan to help a lot of people. Pfizer believes that the acquisition of Xeljanz is going to be really positive for the company overall. From an R&D perspective, they're going to have more brilliant scientists that are going to make the R&D capacity of Pfizer overall be that much better. It's going to advance their portfolio. So they're going to have a broader portfolio with very needed drugs. And Xeljanz is going to benefit from the ability to commercialize their treatments far better. Pfizer has a huge sales organization. They have this scale already. So putting the Xeljanz treatments into the Pfizer model is going to just advance the revenue of Xeljanz. Pfizer provided guidance, and the guidance is not great. In fact, I'm disappointed that the company is not growing. The company guidance for 2023 is they're going to be between 58 and 61 billion, which is a big drop from the 2022 year. Now, I give them a pass because you had a lot of COVID sales in 2022, and obviously we have COVID behind us, and you're not going to sell a lot of vaccines anymore. But my disappointment is in the guidance for 2024. If they're going to be flat from 23 to 24, that is disappointing. Even with the Xeljanz acquisition, they're not growing, which is disappointing. The earnings per share is also okay, but again, nothing to really be excited about. And I'll be using the earnings per share that's provided in my valuation of Pfizer. Let me take a look at some news for Pfizer. First, healthcare and specifically pharmaceutical and biotech, it was really beaten up in 2023. So it's really set to rebound. I'm expecting it. I definitely am. And Pfizer has been heavily discounted. So we may see that this stock really takes off, or it may not. I think a lot of investors may be keeping away from Pfizer until they see it improve. Pfizer is a big cap company. They have a market cap of 162 billion, so really big company. Their forward PE is expected to be 13.6, which is a good forward PE. They also pay a nice dividend. It's almost 6%. That's very attractive. They have good free cash flow generation, and they've always had that big free cash flow generation, which is good. Earnings per share, as mentioned, it's going to be far less than what's reported on this website. It's going to be a little over $2 per share. And my biggest concern is that revenue is not growing very well. And it would be nice to see revenue grow better between 23, 24, and especially 25. Since they acquired Seagen, we should see a significant rise in revenues. So the guidance they've provided is not good enough. I think they should really be growing 10% plus for 24 and 25, since they just spent so much money on this acquisition. So that's my observation of their revenues as well as their cash flows that I'll be using as a value of the company. Based on my analysis, Pfizer is discounted by 16%, not a big discount. And I get my valuation by looking at free cash flows the company is going to produce, as well as earnings per share. Looking at free cash flows, the company does produce a lot of free cash, which is good. Growing that cash by 10%, which I expect, especially with the Seagen acquisition. The cash flows for the first 4 years look pretty promising. Terminal value is really high because they produce such free cash, and their drugs are expected to be in demand for many years. I'm going to have all those cash flows discounted by 8%, which gives me a net present value of all those cash flows of $212.8 billion. I'm going to add the cash on the balance sheet, but take away debt. So I get to an equity value of $193.4 billion. The current market cap is 162 billion. So it offers up a per share value of $34, but the stock's trading a little under 29. So there's a 19% discount on Pfizer using the free cash flows and discounting those cash flows. Earnings per share for 24 is expected to be around $2.05. I'll give Pfizer a PE of 18, which is an adequate PE for this company. And that, I think earnings are going to grow 5% or better. So based on that and this calculation, I get a per share value on Pfizer stock of $31.48, but the stock's trading for $28. So it offers up a 9% discount. I blend the two, but put more weight into free cash flows, and I get to that 16% discount on Pfizer stock. Several analysts cover Pfizer, and some analysts believe the stock's really going to take off in 24. And some analysts believe the stock's going to rise just a modest amount, and some analysts believe it's going to drop a little. I would say most analysts are in the hold camp, and a few really believe in the company, which is interesting to see. The Pfizer stock over the last 12 months has really gone down. It's lost a lot of value. It actually has been the worst stock performer in my portfolio for 2023, and it was the biggest money losing stock for me. So I certainly experienced this downtrend. The stock is valued at $33.32, which is not a big discount. And year to date, it's down 44%. It has that nice dividend because the stock price has gone down so much. So should I buy more shares, hold, or sell my shares in Pfizer? Let's take a look. So first, what do I think about the company? Well, I don't give their management team a passing grade. And the principal reason is the whole write-off of a lot of COVID vaccines. I think they should be better at forecasting and understanding what they should be producing. That was a huge write-off in 2023, and it just doesn't look good overall. I think the Seagen acquisition, it remains to be seen if it's going to be a good one. I think it could be a very good acquisition, but management will need to prove that over the next year or two. The company's debt is well under control. They have less than 3 times EBITDA. They have a solid balance sheet. This is historically a very strong company. And they offer a tiny discount, which is okay. But overall, I'm a seller of Pfizer. I'm going to sell all my shares until I really believe in the business again and feel like they're going to be growing and growing consistently, that they're going to make that Seagen acquisition really work. And then I'd be a buyer. But for now, there's other alternatives within pharmaceutical that are better than Pfizer. Thank you for watching the video. I really appreciate it. If you could leave me a comment on Pfizer, I'd really appreciate reading what you think about the company and what you think the stock's going to do in 2024. Do me another favor and like my video and subscribe to my channel. Thanks again for watching, and Happy New Year.